big money gets it, right? Before critical minerals became a popular buzz phrase on Wall Street, we all knew that if you didn't grow it, you had to mine it. But now suddenly Wall Street has figured this out, and even NIMBYism has taken a step back. So it's quite an interesting time to be a commodities speculator. That's a very interesting question. Of the half dozen interviews I've done over the last week, nobody has asked it that way. The retail sentiment is one thing, but the institution, I think it's actually quite bullish, Lucian. The writing is so clear on the wall. The data center build out, let's say the AI hump is overdone and we're only going to need half the data centers that we're building out. Or let's say it even turns into like the dot-com bust with the famous fiber, the overbuilding of the fiber, and we don't need all these data centers. But we're not going to find that out until after they build them, right? So the silver and the copper and everything else that goes in there, like the demand side here is really robust. And that's just based on this one sector. On top of that, my view is that we're looking at an inflationary outlook going forward. So that's bullish for all things that governments can't print, monetary metals and industrial commodities likewise. We had in the US, we had wartime levels of deficit spending before the war. And now we've got a war blowing stuff up and draining strategic political reserves. There are different ways we could go with this for the different commodities. But the outlook, I guess the scariest thing might be this talk about demand destruction. But I really don't see it. Sure, if oil prices go really high, people might drive less. But as soon as they come down again, it comes back. I don't see that the demand gets destroyed. It just gets delayed. And the insatiable appetite for energy only increases around the world. So I'm not sure exactly where you want to go with this from there, but to your point, a really interesting question. I think the people making decisions about how to allocate capital going forward, the people who are thinking about building LNG plants or new pipelines to get around the Strait of Hormuz, or about all the copper and silver that we need for data centers and photovoltaics and nuclear power plants, all this stuff. It is really strong. The fundamentals are as strong as I've ever seen them, and the big money gets it, right? Before critical minerals became a popular buzz phrase on Wall Street, we all knew that if you didn't grow it, you had to mine it. But now suddenly Wall Street has figured this out, and even NIMBYism has taken a step back. So it's quite an interesting time to be a commodities speculator.
Well, retail investors are hesitant. Institutional fund managers are turning highly bullish on the commodities sector. The massive global data center build out for AI is driving a robust and long-term demand for copper and silver, combined with unstoppable government deficit spending. We're heading toward a highly inflationary future where tangible assets will thrive.
Couldn't agree more. I saw a couple of your interviews this week and the week before. You recently mentioned that you are sitting on a fair amount of cash. Given how bullish you have been on the long-term commodity story, are you still big on cash? And when do you actually plan to deploy it?
Are we there yet? Are we there yet? Are we there yet? Right. Answer, no, we're not there yet. I did buy one stock for the first time in many months. I bought an oil stock last week, coincidentally, and I mean that literally. I did not know that Trump and Iran were going to go at it again this week, but I had an oil stock shopping list, and it was one of them that I thought had gotten to legitimately a buy low opportunity. It was uniquely hit. So I didn't buy anything else on my shopping list, but that one that I thought was oversold, I was willing to go there. But that's just one position. And so, yeah, I'm still about 80% in cash, and I am feeling no sense of urgency. People are saying, oh, Lobo, the oil's getting away from you. You didn't buy anything, just one on that list. Well, but I've been framing this for my readers as a pair trade for 2026. We have seen a strongly inverse correlation between black gold, oil and copper. And even this last week, yesterday, oil was up 9% at some point when I looked at it, and copper was down, not 9%, but significantly down. And we have seen these opposite wiggles in the charts going back to the beginning of the war and even Operation Midnight Hammer last year. So the answer to your question is, why do I need to feel a great big rush to go out and buy something today when what I want to do is objectively buy low, not buy high and hope to sell higher? I want to buy low. And either the war continues heating up and oil goes up and copper goes down, then I buy the copper, or Trump and the Iranians find some way to reopen the strait more, and Trump's worried about the midterms and so on. So I can see where that would be possible. The war cools off again. Oil continues the trend that it has been for months now of 2 steps forward, 1 step much lower, right? It's been heading lower until the latest heat. So if that happens, then copper will go up. I'll miss that boat, but the oil stocks will go on sale. Instead of trying to time the markets or predict which one will go lower, it's really encouraging to me to see these things wiggle in opposite directions. I can afford wait and buy whichever one goes on sale.
Being fundamentally bullish on commodities doesn't mean you should blindly rush your capital into the markets. Sitting on a large cash reserve, like 80% cash, is a tactical decision to patiently wait for true buy low opportunities. Financial markets always move in opposite waves, and holding capital gives you the largest to buy whenever a key sector goes on a deep scale.
Yeah, I see your point, but give me some more color here. What kind of opportunity are you waiting for before deploying that cash? Are you looking for a broad market correction? Actually, you said no. However, maybe weakness in specific commodities, financing stress in junior miners, or just simply better valuations?
The latter. And that's another good question because, yeah, I'm not predicting that oil's going to, implode and go nowhere. With all respect to Doomberg, he's got a 50-year outlook, and that doesn't tell me what oil's going to do now or even this year necessarily. So I'm actually quite bullish on oil going forward, but my view has been, and maybe I'll be wrong, maybe I'll miss this ship, but my view has been that both the Iranians and the U.S. for different reasons wanted more oil to flow. And oil, Brent and WTI had already done a round trip from the beginning of the war to the end. So if that sell-off continued on the narrative of, maybe not peace exactly, but at least the oil is flowing again, then I was willing to deploy, again, not looking at like multi-decade lows or any big explosion, but just looking, 52-week lows or short-term cyclical lows. Cheap enough. It's given my bullish outlook on oil would have been, I don't time the bottom, but at some point, I see an objectively cheap stock like the one I bought last week. I would have expected to see more of those and go up. Like I'm saying, if that doesn't happen, I think copper stocks will go on sale. And here it'll also, it's a similar answer. I'm not looking for copper to go back to 70 cents, or I'd be shocked actually if copper went all the way down to $3. Just the demand side is so clear, and everybody can see it, and everybody knows, despite the the Philos or the Komoa Kakulas, that's like one every 10 years, and we need one or two of those every year to even have a hope of keeping up with copper demand without prices going much higher. So I'm not looking for, multi-decade lows or anything like that, but a rationalization in that market and an opportunity to get some of the stocks at what looks like an oversold opportunity, markets overreact. If copper retreats from $6 to $5, I think the stocks would take it on the chin. If it dropped below $5, to mid 4 or even low 4s, I don't think it would stay there long. But if it got that low, I think we would see, real fire sale prices on the stocks.
Successful speculation relies on buying oversold assets rather than trying to perfectly time a market bottom. Energy sectors and metal markets are experiencing short-term cycle corrections, creating rationalized entry points for smart money. When the broader market overreacts to short term headlines. Disciplined investors utilize their cash to acquire deep value equity.
And so that's, I'm not
But
looking to
Lobo,
time the bottom,
what could
but I'm looking
trigger
for that kind of
$4
sell off.
copper?
Sorry, go ahead. I'm looking
Uh,
for a
s- s-
sell off.
sorry. What could trigger $4 copper or even less? What could trigger it?
The AI hype going into reverse could do that. Even though we all know it's Dr. Copper, it's essential for so many things. It has become, for many people, an AI so-called picks and shovels play. Uranium as well, by the way.
Mhm.
And in both of them, I like them for fundamental reasons, have nothing to do with AI. And the AI thing is just a tailwind on top of that. But as we've been saying, Mr. Market can be irrational, exuberant or depressive. He's kind of manic and bipolar. So I, rather than set a price target, like I'm looking to hold out for 450 copper or something like that, I can see something like this, or just let's say the war really does heat up again. Let's say Trump goes to Congress and gets a declaration of war out of them, and we're going to finish the job. And even if it takes boots on the ground, we're going to kill everybody in the IRGC so that those Iranians can be happy and free again. Something, I think
Mm.
copper would tank on that kind of news. Oil would go crazy, copper would tank. And I don't have a price target for that. Just whatever it is, if that happens, I think copper tanks, the stocks get just whacked even harder, and I would buy that dip.
Even if the massive AI hype experiences a temporary reversal, the structural demand for industrial metals remains unshakable. Copper is entirely indispensable for modern global infrastructure, yet discovering and developing massive new deposits takes nearly a decade. Any significant macroeconomic pullback will only create a massive fire sale before prices surge higher.
Me too. You mentioned uranium. Is uranium scratching the bottom here? We are seeing not just juniors explorers. We are seeing developers, producers pulling back meaningfully. Some of them. Do you believe we are really scratching the bottom here when it comes to uranium equities?
I do not. If I did, I would probably be buying more. Now, I sold my gold and silver stocks, leaving almost entirely uranium in my portfolio for now. So I'm
Mhm.
not feeling any great sense of urgency to buy more anyway. But, really, there is some investor sentiment here that's turned pretty sour, but it's not hated. I don't think uranium is hated
No.
really the way it has been in the past. And again, the like with copper, the writing on the wall is so clear. Everybody knows, well, everybody in the space knows how indispensable uranium is and how, uh, despite the so-called billion pounds of uranium out there, it turns out it wasn't so easy to bring all those billions of pounds of uranium to market. So industry insiders, you know, we we're so bullish based on the fundamentals, but it also has this tailwind from the AI hype and so on. So I don't think it's hated, and it's as a person who's already long, it's not hated. Sure, the stocks have pulled back from recent highs, but less high is not low. I want to buy low opportunity, and if it's not in uranium, that's okay because I already have uranium stocks in my portfolio that I did buy low. Now, one more quick caveat for just
Sure.
right now. This is actually timely for this market at this time right now. We've seen spot just kind of trading sideways all year since that weird spike in early January, whereas we've seen long-term contract prices continue to ratchet upwards. So this is significant. Spot sometimes lags, sometimes run ahead of long-term contract, but it always converges in the end. And so now, for a significant period of time, spot's been underperforming the LTC price. And to me, that says the next likely move, significant move in spot is upwards, and that will probably move the stocks. So, I'm not expecting a double or 10 baggers out of this move. But if I didn't own any uranium stocks, I would want to remedy that like now before the spot price snaps to the long-term contract price.
Uranium equities have pulled back from their recent structural peaks, but that does not mean the long term sector is weak. Well, The short term spot price has been consolidating sideways. Long term institutional contract prices continue to ratchet steadily upward. Historically, the spot price always converges with long term contracts, hinting that the next major lap up is approaching fast.
Yeah, definitely. Lobo, let's discuss silver. For years, many investors believed silver prices were being artificially suppressed. Do you think that the recent rally marked the end of that environment, or are those dynamics still influencing the market today?
So this is gonna get me love and hate from different
I
sides,
know.
but I should put my Darth Silver mask here to answer this
I knew.
question. Um, but I actually am not a manipulation denier as such. I just see manipulation as a constant. Of course, there's people screwing with the markets. All markets, silver, uranium, gold, Tesla, whatever. There's always going to be people who are less than scrupulously ethical in the markets. So if I say, oh, well, they're manipulating the price of silver, I'm going to take my marbles and go home because I don't want to play in this crooked game. Well, I would have missed out on January's surge. I made a ton of money on silver because I didn't take my marbles and go home despite the manipulation. So what people get mad at me is like, well, the silver's down and they want to say, oh, that's because those evil manipulators slammed it down. Well, come on, it pulled a hockey stick. Any market that pulls a vertical hockey stick can correct
Yeah.
without manipulation. It's not the only explanation. Is there some manipulation? Sure. But it doesn't help me to explain it that way. And if I really believe it, if that's the explanation for everything, then I should take my marbles and go home. And if I did that, I would have lost out on lots of chances to make money. So I don't think anything's changed. Whatever degree the manipulation is there, I think it's still there. But clearly the manipulators couldn't stop silver from going 120. So I'm not going to lose sleep over it. Whatever they do, it's marginal or it's around the edges, and they can't stop gold or silver when they really want to go. When people realize, holy beep, we need some real safe havens, which, by the way, still work when the internet doesn't, unlike certain other recent supposed hard money assets. I just don't think the manipulators can stop it when that's an idea whose time has come. We saw that earlier this year. I would expect to see that again. Eventually, as the dollar goes to what my friend Doug Casey calls its intrinsic value, but sure, I think all these dreams that gold and silver bulls have about these, adding zeros to I think that does happen in due course. It doesn't tell me, what the market's going to do this year. As our friend Rick Rule likes to say, don't confuse the inevitable with the imminent. I don't even want to hear about what's imminent. I want to know what's happening now. And what's happening now is a correction. And I'm hoping it's just a consolidation before the next move higher. That is my base case. But it is possible that we have seen a significant interim peak, and both gold and silver could go lower. It's not a prediction. I'm not saying I want that to
Sure.
happen. Put away the
Sure.
rotten tomatoes, dear audience. But I think it is imprudent to deny the possibility.
Many long term precious metals bulls mistake normal market correction for permanent artificial suppression. Any asset class that undergoes a sharp vertical rally requires a healthy phase of technical consolidation. Physical gold and silver function as reliable wealth havens, especially during periods when digital infrastructure fails.